Hello, today is the 13th of October 2010. Silver has managed to pierce the 24 level as it was 2 cents shy at a level of $23.98 in intraday trading today. Therefore, where are we now? Where we came from? Where do we have the potential to go? Well, where we were was in a bull run with a spectacular year in 1979. A price correction, sideways consolidation, bull run, a little bit of consolidation within the bull run, and a breakout right now. Therefore, we'll do some trend analysis from this bottom and find out what happened when they came to key levels of resistance and what the next ones will be. And this level was tested on 2 occasions, so the $5 or so number was a level of resistance, and it really consolidated over that time for 1, 2, 3, 4, 5, 6, 7, 8, 9, pretty much a full decade at this level. Then the next significant level would be most likely towards the $8 level. It was resistance here. It closed the year here, and it managed to it's really tough to go through different periods when you have these big moves like we had in here. However, with that said, the significant resistance was around 8. It managed to have a small pierce of this level on this year, and then it got above it and then moved higher. So the next key level from the $8 mark would be very difficult to determine. You had this bottom in here, you got up to this level, and these levels in here. So maybe you can make a case that we were in some sort of boxed range or something. Maybe something in this little direction here. Something in that area here. I don't know if it should be up that high, maybe towards this height. Either way, what it shows is that we consolidated within this top area for about 3 years. Roughly in this area here, we'll say. So we've spent a few years within that area, and it's now breaking out. And normally you don't look at this type of chart when you're doing intraday trading. This is, I think, one of the rare situations where you would, because we're at that big resistance level. We're not the point where we can compare previous levels of support resistance when it was only for a few months, and I don't know how well price history is going to reflect when it's in 30 years of duration. And instead, what I would tend to use is that of Fibonacci. And I've already talked before in previous videos about this range of the 4 bottom and this the top at $8. This is easier to see if you look at charts like the monthly charts and stuff like that. But the Fibonacci that it had was a break on its first level, and then its next one came right up to the $21 level, which was resistance in '08. And now the next one is 32, which ironically is where it closed at the end of 1979. And for exact numbers, we'll show you actually. We'll go back to the 16.5 and 19.5 in a bit because that's an important area. But it's the 31.41 on the linear side. It already went through the 10.5. It went through the 14.5 pretty easily. It found resistance at 21, and the next one is 32. As far as the exponential numbers are concerned, it had tangled around with 18 for quite some time, and 28 is very big within the Fibonacci levels. But for now, I want to talk about the 1650 to 1950 range. Why is this so important? it has been a big part of resistance and support within this rally in here. Let me just see if I can get a monthly chart open here for you. Okay, so this is the monthly chart. It hasn't been updated for this current month, but that's really not important. The 1650 area is somewhere approximately in here. The 1950 area connects these significant pierces up top. So I'm using the even numbers, and within the 1650 and 1950 range, that gives us the breakouts of first 2162 and 2135. And those levels were taken out huge. They didn't hold for resistance for much more than a day or two, most likely. None of the resistance levels that we have created, they all get taken down within 2 days, maybe 3 at tops during this bull run. So the path of least resistance obviously is higher. We can see that we got 2398 as the next level, and on a linear basis it's 2435. We also have on the hourly chart, not shown in this video, a cup and handle formation. You can see it on the FinViz chart. And the neckline and breakout is from 22.5 and 23.5, which can give us a price objective towards 24.5. And if we accelerate through it, we're going to have to reach a big level, because we go back to that yearly chart. We already got by that big resistance level that I was talking about in here. So what's the next one? Are we going to go all the way up to the 50? And I guess I already talked about that being at 32. But on a intermediate term level, if the 24 gets taken down, that would be like yet another one, because all the Fibonacci levels and levels I've talked about, like $20 an ounce, which I guess 1950 I said was big. 20 I said was was only psychological. And then you had the big levels around the 21 area, which was the resistance from in here. That got taken down. 22 was big on a Fibonacci level. That got taken down. And now we're at 24 Fibonacci.